What's up, you guys? It's Paul here. In this video, I wanted to give you a quick update on what the market did today, especially the SPY and Nasdaq. It was a pretty red day throughout. We were down about 1.1% at the end of the day, but during the day, intraday, we actually went a lot lower than that, which was pretty scary. But we saw more of a recovery closer to the end of the day, pretty much the last 1 hour, and even post market, as you can see here, we're still up 0.14%, which is a pretty good sign. But then again, some of the key levels that I talked to you about in the previous videos broke down, and which gives me a little bit of concern, but I'm going to go over them in this video, okay? So if you watched my previous videos, I talked about how we were kind of trading in this channel where this was the previous 52-week high before the March crash, and this green line here was a 50-day moving average. And I thought that if we stay in this channel and if we bounced off of the 50-day moving average and went back up, then we should still be okay. But as you can see, it pretty much crashed through the 50-day moving average without much of a turnaround, okay? Now, during the day, we saw that it reached as low as 322 several times, actually reached it almost 3 times today. And if you look at the market here, this black line here was the previous high just before we saw this correction back to the 200-day moving average, okay? So this is another strong support potentially. We saw that it tested it 3 times just today and kept bouncing back up, which is a pretty good sign, but that's another key level that I'm watching right now, okay? If it does drop below that, we still have the 100-day moving average, which is around $318, $319 for the SPY right now. And further down is the 200-day moving average, which is around 310, okay? So these are the 3 key levels that I'm watching right now. Now, another thing that raises concern for me is the MACD line here. I told you about how if we do go below 0 for the MACD line, that's usually a cause for worry, because that's exactly what happened here. It's starting to look very, very similar. I don't really think it's going to go be this bad, because this was a result of a lockdown situation where so many businesses were shutting down and everything was new and so many people were losing jobs and there was a huge hit to the economy. But a lot of that is kind of understood at this point. And so I'm not expecting this kind of a reaction, but if it does keep going below 0 and we don't really see this turnaround like we saw here, I think that would be a cause for concern, okay? So these are the different key levels that I'm watching to see what's going to happen. Now, if you actually look at the Nasdaq, we saw a bit of a recovery there. It was relatively performing better compared to SPY, for example. We saw it drop only 0.33% today, and post-market we're up 0.01%, just a little bit. The point being, compared to SPY, Nasdaq did a lot better because a lot of tech stocks started recovering, okay? So Apple started off pretty much in the red. It started going up. Then which it looked like it was kind of a turnaround once market opened, but then we started seeing that it was going down. But by the end of the day, we saw that Apple was actually up 3% and up 0.5% more during after hours, okay? I played a quick intraday trade here where when it was around here, I got 2 of these October 16th 110 calls. They're up 37%, which is a solid day trade, even though I normally don't day trade. I'm still looking to see, I'm going to hold this and see if Apple still keeps recovering. If you look at it from a monthly chart, we are down 12% over the last 1 month, but if you actually look at it from the peak, we're down a lot more, nearly 20%. So we may see a bit of a turnaround in Apple, and since Apple is such a big portion of most of the indexes, I think it can carry the market forward, but I'm going to keep an eye on it to see if they can still keep going up, okay? Another stock that popped a lot today was Fastly, and the reason for Fastly is because of the news on TikTok. So if you guys have been following the news on TikTok, there was a chance that TikTok was going to get banned or deleted from the App Store by the 20th, but finally Oracle and Walmart struck a deal with ByteDance, which is the actual owner of TikTok, where Oracle was going to get about a 12.5% ownership in TikTok, Walmart about 7.5%, and ByteDance was going to keep 80% of the ownership, but U.S. venture firms own 40% of ByteDance. So overall, the U.S. owns about 60% of TikTok now, so Trump approved it, and there's a good chance that TikTok will not get banned, okay? And so the reason Fastly popped so much is because TikTok is one of their biggest customers, okay? And so they ended up popping up 10.4%. Another stock that popped a lot today was Roku. They popped a crazy 17.6%, and that's because of their partnership with Peacock, okay? With Roku, companies like Trade Desk also pop because Trade Desk partners with companies like Roku for connected TV advertising, and so Trade Desk also benefited a lot from it. Okay. So that's kind of what I wanted to share with you guys. Just a quick update on where I think the market is going, the different key levels that I'm watching, the different stocks that are really influencing the market right now, and why some stocks popped a lot more than others. Okay, so just keep an eye out for these levels here. As I said in the previous video, unless I see like a quick opportunity for a move in a particular stock like Apple, for example, I'm not buying options a whole lot. I'm just buying them very, very rarely. Even if I do, I'm only buying them for a few months out, so that any volatility in between now and expiration can work itself out. Okay, so be careful with options. Stick to spreads if you're not confident in the trade, and don't rush in until we see some kind of a resolution. Okay, I think there's going to be a lot of volatility between now and the election, and there's going to be a lot more soon after the election depending on who wins, but just keep an eye out for it. Usually September to October is a very, very volatile period, September usually being one of the worst months during a trading year. Okay, so I hope that you guys find that helpful. If you enjoyed it, please just smash the like button, leave a comment below if you have any questions. And the Discord membership that I talked to you in the previous video, it's going to be up really, really soon, guys. We're still working out some technical stuff behind it and how I can link it up to our website and get people in as members. So as soon as that's out, I'll be sure to send out a link to you guys here. I'll put it in the description and let everyone know who's interested in it. So keep an eye out for it, okay? Please do subscribe if you haven't already and hit the notification bell. And thanks again for watching. Until next time.